Thank you for joining us on the MB Microtalk on Management Discussion and Analysis. I'm Laura Richmond, and I'm counsel in Mayer Brown Capital Market Practice. MD&A is one of the most important portions of a company's SEC filings. Done right, MD&A should let investors see the company through the eyes of management. And it's especially important to revisit MD&A at this time because of the ongoing need to describe the various effects of COVID-19 on the company, as well as to take into consideration recent amendments and guidance impacting MD&A disclosure. Discussion of known trends and uncertainties that are material is essential to the MD&A, and COVID-19 definitely fits that bill. So MD&A should be giving management's perspectives on the type and the extent of COVID-19's effects on a company. The Division of Corporation Finance issued 2 sets of COVID-19 disclosure guidance this spring, and both included series of questions that are very helpful to have companies consider when they're assessing the impact and how they're going to disclose the effects of COVID-19 on their particular circumstances. I'll just mention a few of the many possible questions to consider for MD&A disclosures in the COVID-19 context. For example, are there past or ongoing supply chain issues? Is there material risk that the company may not meet loan covenants, or that it may not be able to service its debt or its rental obligations? Is the company having a dispute with its insurance carrier regarding business continuity coverage? There's no one set of lists that works for everybody. The questions are what's important to the company. If a company uses a non-GAAP measure to adjust for the impact of COVID-19, then the MD&A should be explaining why the measure helps management and investors assess the effect of COVID-19 on the company. And it's just not appropriate to present a non-GAAP financial measure solely for the purpose of presenting a rosier picture of the company. And given the length of the pandemic, companies that have been using non-GAAP financial measures adjusted for GAAP need to consider whether the adjustments remain appropriate and if a particular effect has become recurring. You should expect the staff of the SEC to review and comment on your COVID-related MD&A disclosures. And you also should be aware that the SEC's Division of Enforcement has publicly stated that it will scrutinize COVID-related disclosures. So in addition to the COVID issues, in November, the SEC adopted amendments to the MD&A requirements. And these become effective 30 days after they're published in the Federal Register. But even then, companies don't have to comply with the amended rules until their first fiscal year ending on or after 210 days after the effective date. So we do have time on that. But once the amendments become effective, companies have a choice. They can comply early if they want, but if they do, they have to provide disclosure that is responsive to the amended Item 303 of SK in its entirety, and to do so for applicable future filings. So it's a package deal if you're going to go early. Among the key changes that the amendments brought about are a new paragraph that sets forth the objectives of the MD&A. And the amendments modernize and clarify, and in some cases they enhance, and in others they simplify liquidity and capital resources and results of operations disclosures. For interim disclosures, the amendments allow companies to compare their most recent quarter to either the corresponding quarter of the prior year, as they do now, or to the immediately preceding quarter. In addition, the amendments explicitly require disclosure of critical accounting estimates, And they also eliminate some prescribed items, such as the separately captioned section for off-balance sheet arrangements and the tabular presentation of contractual obligations. Although these topics would be discussed if material using a principle-based approach. You can find more information in our legal update on these amendments that's posted on our free writings and perspective blog. In terms of other SEC guidance, in January 2020, the SEC issued guidance regarding the disclosure of key performance indicators in the MD&A, and that's worthwhile to review if you KPIs. Briefly, KPI disclosure should indicate how the metric is calculated, what the underlying assumptions and estimates are, and why the metric is useful for investors, and how does the management use it to manage or monitor the company's business. And changes in how you calculate or present a KPI can themselves give rise to disclosure obligations. If you do use KPIs in earnings releases or other presentations, be aware that you may also need to disclose them in the MD&A, because if you don't, you may just get a comment from the SEC asking for just that. Also noteworthy are 3 compliance and disclosure interpretations that were issued in January 2020 in connection with previous amendments that permitted companies to omit a discussion in the MD&A of the earliest of 3 years in certain circumstances. And so if you're taking advantage of that relatively new procedure, it would be useful to review C&DIs 110.02 through 110.04. And you also just need to keep in mind regular ongoing MD&A disclosures. So for example, consider the cost of cybersecurity efforts and cybersecurity incidents, and whether you need to revisit your prior MD disclosure in that area. Also keeping in mind that the SEC expects companies to consider the impact of such incidents on each of their reportable segments. MD&A topics are now a focus regularly of SEC comment letters. In addition to the couple points I already mentioned, typical MD&A comment topics may include results of operations, asking for descriptions and quantifications of unusual events or significant economic changes, or they may ask for explanations of critical accounting policies and estimates that management used in valuations, drivers of cash flow and trends and uncertainties that are known or are reasonably likely to affect future cash requirements may also be the subject of SEC comments. And these letters are publicly available, and they really do provide helpful precedent for you as you draft your MD&A. But in conclusion, I'll just remind you that it's really critically important for you to draft and tailor your MD&A for the company's particular facts and circumstances. Boilerplate just isn't good enough for the MD&A. So feel free to visit our blog, which I already mentioned. It's the Free Writings and Perspectives, and to get more information that you may find useful. And with that, I'll thank you for joining us today.